Good morning, traders. Welcome back to another pre-market stream here today. All right, so thank you guys once again for tuning in. As always, good morning, Ballarat from Australia, Roman, Eric K. Good morning, guys. So sound coming through okay, stream quality working all right. Looked like it was a little laggy there for a second, so hopefully that doesn't cause us too many issues. Good morning to Pickle, SJ, yo, what's going on, everybody? All right, so we were able to finish out yesterday green, gave back some money, is what it is. So hopefully kind of continue that momentum into today. Again, things are going to start moving a little slower. We're kind of done with earnings, so again, coming down to more research than it is just waking up in the morning and seeing stocks gapping up and down. So regardless, I did see Netlist. A lot of people traded Netlist. I did not trade it myself. I naturally don't trade anything that's below $1 for the most part. I mean, when it comes to trading a low price stock, I almost never trade anything below $1. So Netlist never once hit my scanners yesterday. Nothing at all because again, I don't scan for stocks that particularly that low. So that's where I'm at with that. All right, let's flip screens here, get things going. All right, guys, here are the stocks gapping up and down. So go ahead, screenshot it, take a second to write some of those down before we get moving forward here. Fred again, maybe, possibly. Good morning, everybody. Good morning, Razul, Marcus, Austin Berger, possible. I'll touch on Fred just a little bit here. We will definitely be talking about that one. It's not on my mains, but we will be talking about that here in just a few minutes. You can also see up at the top of the screen, those are going to be like kind of my main watch. Those are all the stocks that I'm watching today. Tesla, Netflix, SONO, REN, and CDMO. Those are going to be all the ones for me today. All right. I think everybody's probably pretty good. I'll give you guys a few more seconds here to write that stuff down. A little spill. Never hurt anybody. Raj, yes, we do share our screen while trading. We share a screen. We share stock scanners. We kind of help analyze some stocks for some people here and there. But yep, we do share screen live when we trade. Good job, Andrew. Ron, no, not necessarily. No, it wouldn't necessarily be hard to cover a short position, no. Because if you think about it, right? All right. I mean, all right. So here, real quick before we move forward, right? So one of the questions we just got is, if the market was crashing, would it be hard to cover a short? Well, if the market was crashing, you typically would see a lot of stocks dropping, right? So let's think about this. If the stock market was crashing, would it be hard to cover a short? It wouldn't really be hard to cover a short because when the markets are going down or when stocks are going down, right, that means people are selling them. So if you were someone who was short and you wanted to cover your position, that means you would therefore actually be buying the stock. So as the stock is coming down and people are selling, theoretically, they're looking for someone to buy the shares they're selling. So if you were short and it's coming down, that means a lot of people are selling, which means they're trying to get a buyer, which means you probably wouldn't have any trouble covering your short because you'd be buying back the shares while everyone is selling. So you'd be amongst the few, right? Majority are selling, so it'd be harder for you to actually sell than it would for you to buy. So yes, it would not be hard for you to cover a short. But depending on the stock you are trying to short, it might be harder to enter a short position because everyone's selling, theoretically. Okay. No problem. Yeah, so for those of you guys tuning in right now, if you guys didn't watch that video I did the other day that's titled One Step Finding Stocks, you should all definitely watch that video. because it is, in my opinion, it's pretty damn good. It's basically gold. I basically tell everyone how they can find stocks to trade all year long without a scanner or doing any research. And if you were just to follow, if you do exactly what I said in that video, you will never have a problem finding stocks to trade. Never, ever. Right? If you do exactly what I said in that video, you will be able to find stocks to trade all year long with no research. And for people who do part-time trading and don't have the time to do a bunch of research on stocks, that covers up a big problem for you. For beginner traders that don't know how to find stocks, that covers an issue for you. I mean, it honestly is pure gold. It's super simple, straight to the point. All right, cool. Raj, it's the first link in the description of the video. Check out the first link in the description of the video to join our chat room. All right, now moving forward, let's do this. All right, let me size that guy down. We're gonna go like this, boom, boom. All right, guys, so first one that's going to be on my watch list here today is going to be, we're going to talk about Netflix. So yesterday I was optimistic about Netflix's long, and as you can see, yeah, I was wrong, but I did end up shorting it at some point yesterday. So I was optimistic about Netflix's long. Of course, that did not work out, and it actually failed. So what I'm going to be looking at right now specifically is a 180-day chart. I'm going to delete these drawings just so we can kind of start fresh here. So if you look at the 180-day chart, right, after this big bounce, we had a nice drop, right? Then we kind of bounced up. We rejected right around 350. We pulled back. We popped up. We rejected right at around 350. We pulled back. We popped up. We rejected just short of 350. And then yesterday we pulled back hard. We had a small bounce in the middle of the day, and now pre-market we are starting to roll over again, which thus makes me believe we're probably looking for a leg down this way. Okay, so I'll be watching Netflix short today. All right, now if we do let's do a 20-day chart. So if we look at a 20-day chart, what I'm starting to see here that could possibly happen is this. All right, you can kind of see, let me do that. Now this is more or less like this. All right, so we still have some room in the here, but if for whatever reason this kind of follows this pattern right there, we could see it roll over and break down today, and I believe we'll see it come down to at least test $340. So I am short bias on Netflix. I do believe we're going to see it start dropping to the downside today. It might not, honestly, because if you look at, and here's another thing, right? If you look at Netflix for the past couple days, right, look at all the support that is around 345, right? It's got a lot of support there. It consolidated there, bounced, consolidated, bouncing 340, so this 345 area it's pretty key. So if it can roll back over, get below 345, I'll definitely look for a short with a target of 340 on Netflix. Okay. And then secondly, if you do, let's see, is it 180 day? Not really. I mean, kind of. I mean, yeah, forget what I was about to say. Still kind of short bias on Netflix today. Netflix. So AA, I could look at the daily chart, right? So here, to answer your question, right? Gentleman just asked, why am I looking at a 180-day chart versus a 1-year chart? Well, we'll see. Ready? Let's look. Oop, that's not what I wanted to do. Excuse me. Let's look at the 1-year chart. All right, so what does the 1-year chart tell me? The 1-year chart tells me that it bounced, right? 1-year chart's telling me it bounced. It rolled over, and it's just holding support at 350, but it's not showing me this possible rolling over. It just shows me we're going through consolidation. But if I go to a 180-day chart, it shows me the bounce, the rollover and dump, the rejection, the rejection, the rejection, and the rollover. So it shows me 3 easily identifiable rejection points, which means we've confirmed resistance right at about 350 to 355. It shows me the last drop, and it shows me that the stock is now starting to roll over and that today might be the day that it goes down. But if I were to look at a 1-year chart, the 1-year chart does not specifically show me. It shows me it has resistance here, but I don't get to see the 3 taps, and it doesn't actually show me the stock is rolling over because we have not yet started the day. So I get to see the pre-market trading action by looking at the 180-day 4-hour chart, which can therefore show me a little bit more to the picture. All right, moving forward with Tesla. So hopefully you guys took the advice yesterday in terms of Tesla long bias. It worked very good. I mean, out of the gates, I was up like 16 or 1,200 bucks right out of the gates on Tesla before selling out and then giving back a lot of my money. Service is accessible by phone, both chat room and live trading room. You can actually download the app to join our live trading room on your phone and use it that way too. So I was saying earlier that Tesla could be a long only if it were to hold this like 280 price point. And as you can see, it's starting to break down the 280 price. So I am no longer long bias on Tesla for right now. I'm actually turning a little bit more short bias. But I will say this, right? I wanted the 280 price point. And I was saying if 280 holds up, that's where I want it. But, you know, it doesn't necessarily have to be 280 because if you look yesterday, Tesla was holding a pretty good support right about 278. And then that's where we bounced a couple times already pre-market. We're trying to bounce there again. So if Tesla can hold this 278 level, it might still in fact be good for a long. But the more that it keeps pushing lower on this 278 price point, the more short bias I become. So being a little optimistic here, if Tesla can hold 278, we might have a long. But all in all, it's starting to turn more bearish as we have its high in aftermarket going down, downtrending. So theoretically, we are starting to look at a more bearish Tesla. Okay. And then for anybody who said that it was a great idea to buy Tesla, that we knew that this whole smoking weed thing was just a strategic play to get the share prices lower. Elon Musk does not have that much control. Elon Musk does not have so much control over his stock that he can precisely smoke weed, cause it to drop, and anticipate that everyone's going to buy it up and shoot it straight to the moon. Because all I see right now on Tesla is a bearish stock. So regardless of the news and these, right? So here's the thing is, right? This thing bounces for 2 days and everyone goes, oh, he's a genius. And this is why he did it, because now he's going to make the stock go up. It's like, no, right? Think about it. The stock was at $390 a share. And over the course of, about a month, over the course of a month, it dropped from 380 all the way down to a low of 200. It was like 250. So you do the math, 380 to 250. That's $110 a share, $110 a share that the stock has lost. So it lost $110 per share over the course of the last month. It just so happens that Elon started coming out and smoking weed. So his share price was already getting crushed before the news that just recently broke. It was already getting demolished. Okay? So it's not far-fetched, and it makes sense, and it's well anticipated that we were going to have some sort of significant bounce on Tesla. Okay? But you still, in order for Tesla to get back to where it was, it still has to tread another $105 a share, right? Because we're at like 270 all the way back to what, 380? So we still have, 270, so that's 30. Yeah, we still got another $110 or so. We still got another $110 to go back to the upside until it gets to really where it was. $110 a share to really get back to where it was when everyone thought Tesla was getting bought out or going private, right? So Tesla still has a long way to recover before I would start getting all super happy about it. Because, again, as stated before, we do have earnings coming up here in the next, 10/31. So we got earnings coming up in about a month and a half, month or 2 months, right? And there's no way that Tesla is a buy for a long-term hold yet, for new investors, that is, until this next earnings reports happen. Because if this earnings report is bad, you can be quite sure that we're going to see this happen on Tesla. It's going to go down, okay? So what you're seeing right now is a short-term bounce on Tesla, which is well needed after a 130-point drop from the most recent big highs. So yeah, a short-term bounce is expected. Elon is not a genius for smoking weed. Elon's stock was already getting crushed prior to smoking weed. Elon's news about the weed thing only really caused a short-term crash, which was then therefore bought back up and also was a short squeeze, okay? The recent moves on Tesla were not solely people buying shares because they wanted to invest, but probably majority of what started that nice dip buying opportunity was short sellers covering up from 390, short sellers covering up from 370, short sellers covering up from the 340s, and then anybody who was short on it that day that was wrong. So really, Elon's genius tactic was really not that genius in my opinion. But again, what started that move on Tesla up was a short squeeze, okay? So anyways, on to the next thing of agenda. So for me today, Tesla could be a long, but I'm still thinking we might see it break this 278s, and then it might be more of a short play. We'll see. All right. One second. Nike. Is Nike moving? Yeah, I mean, I probably won't trade Nike, but there was news that broke that Nike's sales went up like 30% after the Colin Kaepernick thing. Where's my credit when it's due, baby? I told everyone, don't short Nike. It would be a horrible idea to short Nike just because Colin Kaepernick became the face of Nike. Everyone's like, oh, it's going to crash. It's like, dude, no, it's not. It's like, no. Right? Let me put it this way. If Colin Kaepernick became the face of Apple, would you stop buying your Apple's phones? Would you stop buying MacBooks? No, you would not buy the MacBooks because Colin Kaepernick does not affect how your Apple product works. If Colin Kaepernick became the face of Nike, and then that's what caused Nike's comfortable shirts to turn to itchy and scratchy, then yeah, their stock price would probably drop. But Colin Kaepernick has zero effect on the actual product that is produced by a manufacturing company like Nike. He has zero impact on their actual physical product, and their physical product is what people pay for. Just like Apple and Samsung, you're paying for their phone. If their phone becomes shitty, you will then stop buying their phone. Okay. So again, this was this is kind of expected. Sales to jump 30%, I had no clue, but I didn't expect Nike to be a short. Now, last one on my list is SONO. SONO had earnings today, right? So if we look here at SONO, right? So SONO is an earnings play gapping down. It is also a recent IPO. So it doesn't tell me whether I have shares as short on, I don't know if I have shares as short yet on TD Ameritrade. I checked earlier, but it didn't actually tell me. It's just kind of blank. So I don't really know yet. So I'll find out when the market opens and I try to short it and it tells me I can or I can't. So with SONO, it's gapping down today on earnings. If we look at the 180-day chart, the price is at $17.50. So right now, SONO is starting to come down into a bunch of yearly support, right down in the $16.15 area, $15 area, excuse me. So, I mean, I could see SONO dropping a little bit more, but with it being so low priced and it already dropping from 21 down to 17.5, I'm not super crazy about the short. I mean, we're already down pretty big. We're coming into some support around $16 and $15, so it has a little bit of room to the downside. But just by looking at the stock earlier, right, from look at after hours trading, look at all that. I mean, it wasn't a clean move down. It was a very choppy move down. So like it already struggled to go down before. So that in itself makes me believe and or feel that even if this does go down, like on a short today, it's going to have a choppy short, which is not going to be fun to trade because it could get really fakey, right? And then it also leads me to believe with how shaky it was coming down that this might not actually be a short today, and we're going to see it recover pretty good. So I'm kind of optimistic on a long play for SONO today. All around, I'm playing it short bias until it tells me it's a long bias trade. So with SONO, what I would do is if you're going to watch it short, mark off all the key levels pre-market that it popped to. So one would be 18.5, next would be 19. Another one would be here at 19.23, and then 19.5, and then all the way up, et cetera, et cetera. All right, so those are all my plays there for the day. Is it hard to borrow? Yeah, it wasn't showing up on mine, so chances are I won't be shorting SONO. So again, if it's hard to borrow, I can't really short SONO. Well, we'll talk about Fred real quick, and then we'll talk about that like Nestle Quick NLST thing or whatever stock name that is. I know it's not Nestle Quick. I'm just making a joke. So Fred, oh no, not Fred. Sorry, RENN. I will not be watching Fred today. No, RENN is the one I wanted to talk about, unless it changed and it looks pretty bad. No, it's actually not too bad. So RENN looks like they had their earnings 9/11 before. Yeah, so it looks like they had their earnings here, earnings report, and as you can see, it's spiking up. If you look at the yearly chart, the yearly chart doesn't show you much because we're still into pre-market trading. But if you go into the 180-day chart, this is what RENN looks like. And I know I don't normally mention penny stocks, but I think I can honestly say this is something I am considering trading today as far as penny stocks go, right? Because if you look at it, RENN popped here, and then it just went through a long downward consolidation. It finally got into good news on their earnings, and now it's starting to pop. And I mean, it only has like really this small little pop here to get over and just a little bit of resistance back from here, right? And then, you know what I'm saying? Like, let me mark these off in red squares. The only real resistance here is this guy and this area back there. If it can get up and over, right? If it can get up and over that resistance, I mean, over $3, I mean, you could really see a nice squeeze on it. I mean, because there's really nothing here, right? Once it gets over that red box that I circled and that red box, I mean, think about it. It has all that room to go up. You know, I mean, there's really nothing stopping RENN from pushing higher once it gets over this kind of like $3, maybe $3 and $3 to $4. If it can get up past $3-4, it has room to run, but it's got to get up over 3 first. And so that's the 180-day chart. The 1-year chart shows that, yeah, I mean, it's above all of its moving averages. The only thing it has to deal with is previous price action resistance, which is at $3.24, and then some up to $4. So yeah. Now, next one here we'll talk about is what is that? That NL. Oh, let me go back. I didn't touch enough on RENN. So with RENN, right? So we've seen it, right? We've seen RENN push up, then it pulled back. It pushed up, pulled back. So it's definitely got resistance here at 270. Now we've seen it pull back and downtrend. This is actually kind of becoming, in my opinion, better for a long because it's pulled back so much here pre-market. It's starting to get towards a better buy point, right? Less people would be interested in buying it up at the 270 resistance than there are people thinking this is now a good dip buy. So what I would say is watch RENN possibly long today out of the gates around this 220s area. If it can hold 220s, that would be good. Let me see something else here. Yeah, if it can hold like 220, 225, and it keeps holding, so if like the market opens and it's like doing this, and it's just kind of holding there, and then it starts to curl, I would say it's good for a long. And then what's that other one? NLST? Is that an NLST? Yep, net list. So this is the one that everyone went crazy over yesterday because it was like 36 cents and it popped up and ran all the way to $1. So this basically attracted every single person in the world to trade it yesterday because it was 30 cents. So nearly anybody could afford to have traded. So net list has now become the biggest talked about stock for yesterday. It'll probably be the biggest talked about stock today. You go to every single Facebook group, chat room, and they're most likely everybody's going to be talking about it. So just know with trading Netlist, you're going to be entering into a stock that has an extreme amount of inexperienced traders trading it. So the patterns that you think are happening, be even more cautious with because you don't have the experience of you're having inexperienced traders trading it. There's going to be a lot of volume. It's going to be overcrowded. I can tell you for a fact this thing is going to be extremely overcrowded. I won't trade it. I don't have a need to trade it. I don't want to trade it. But for those of you out there, this is my advice, that you're going to have a lot more inexperienced traders trading it. Therefore, patterns might not have the follow through they would normally have. Secondly, it might get overcrowded. When things get overcrowded, what happens is things spike up and then they pull right back, and they spike up and then they pull right back, and they start trading very choppy, right? Why do they trade choppy? Well, when something that low priced is being traded so heavily, people are trading tons of shares, right? Tons of shares going in and out. Think about an inexperienced trader. When he gets in and he doesn't know how long it's supposed to go up for, he might pop in for just 3 or 4 cents, and then he sells all his shares and he causes it to drop. When in reality, it should keep going up, and it's not, because you have a lot of inexperienced traders taking their profits when they're not supposed to even be taking profits, or they shouldn't be, shall I say. So it can cause a very choppy trading day, and that's normally why I'll stay away from these. So like if I were to look at yesterday, right? I mean, like yesterday, this is just disgusting. I myself cannot stand trading a stock like that. Look at that. For some, they're going to be like, there's nothing wrong with that. I was just doing a sideways consolidation. But yeah, I mean, look at this. Up, down, 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 humpty dumpty 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 dumpty. Like that is just super annoying. So that's why you'll never find me getting into stocks like that. It's overcrowded, too much back and forth for me. I can't handle that. And that's a personal thing, but I can tell you most people don't like to either. But then again, you might miss out on this massive gain. Okay, so. Anywho, guys, that's all I have for you guys today. All right, so that's all I have for you guys today on my watch list. So again, a lot of people are going to be trading that net list. As far as penny stocks go, the only one I really like here pre-market is RENN. I'll keep an eye on Tesla. Probably my main play is going to be Netflix and SONO. Other than that, I'm just going to kind of sit back and see if something else kind of shows its face. I think today is going to be more of a slower day for me, so we'll see. Buy the dip, sell the rip. I don't believe REN is OTC. SSC. I'll take a quick gander at SSC, see what this is all about. Oh, that must have just came out of nowhere. Yeah, that must have just started popping up while I was on the stream. So let's see. SSC says signs a 3-year, $6 billion deal with China Auto Financing, company first auto loan, Ideanomics, chief strategy officer and chief investment officer, blah, 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 blah. Yeah, so it received some good news. Let's see. Yeah, SSC could be good, possibly for a long. It's pressing on some good resistance here around 570s, 550s. It's up really big, so, I mean, wow. Yeah, it's kind of getting stupid. Yeah, actually, watch SSC. Looks like it could be a good trader on the day as far as penny stocks go. Doesn't have a whole lot of volume, so it's not overcrowded. With the way it's performing right now, it looks like it wants to squeeze. So, yeah, SSC might not be a bad one to keep on watch, too. All right, so anywho, that's all I got for you guys today. With that being said, Squawk on the Street. So that's CNBC, right? Squawk. Squawk, or they do Squawk Valley. I don't know. But anyways, that's all I have for you guys today. So thank you guys once again for tuning in. As always, do give me a like, share, subscribe before you head out the door, as I would really appreciate it. Other than that, I'll see you guys all tomorrow morning for another stream. All right, so take care.